Joining us now, Financial Times columnist Gillian Tett. Gillian, it's great to have you here. Let me read to you what the president posted this morning ahead of this Fed decision. He wrote on Truth Social, 2Q GDP just out. He's talking about the GDP report that came out this morning. 3%, way better than expected. Too late, must now lower the rate. No inflation, let people buy and refinance their homes. Do you expect the president's attacks and this increasing pressure, even this morning, on Jerome Powell to have any impact on what the Fed does today?
Well, we've just been talking about earthquakes, and I think the Federal Reserve is dealing with its own political earthquake because we've not seen this level of pressure on the Federal Reserve for many decades from a president. And many economists would say that President Trump's sense of economics is entirely topsy-turvy because normally, if the economy is doing better than expected, you do not cut rates. The danger is, of course, if you cut rates when the economy is actually booming, you end up with much worse inflation. And so I don't expect that the governors, Board of Governors today are going to actually cut rates because apart from the fact we're getting mounting evidence of the economy remaining much stronger than people expected, we're also certainly in the debate around inflation right now because it's not clear that tariffs definitely haven't hit inflation. There's a big time lag effect. And the Federal Reserve right now is really concerned that we'll actually only see the impact of inflation or the tariffs later this year.
What I'm hearing you say is, today's newest numbers that we got, that 3% growth for the American economy in the last quarter is making it even less likely that the Fed's going to cut rates. So if that doesn't happen, if they don't cut rates, what does that mean not only for Powell, but for American finances?
I think there are 2 or 3 points to make. Firstly, for President Trump right now, Powell is a very convenient piñata or whipping boy. Because if the economy does slow down in the coming months, and there are plenty of people around the White House who are aware that that's quite likely to happen, they can blame it all on Powell. So actually, I think the last thing that President Trump wants is for Powell to suddenly vaporize in a puff of smoke, because then he loses his favorite whipping boy right now.
That's an interesting point. Go ahead.
Secondly, people forget that when President Trump talks about rates, he's only talking about the short-term overnight policy rate that's set by the Federal Reserve. The rate that actually matters to American homeowners and borrowers is usually the 10-year rate, which is actually set by the markets. And the 10-year rate reflects what investors think is going to happen to inflation and the economy in the future and the debt. And the key issue to understand right now is that if the Fed slashes overnight rates, short-term rates, there is every chance that investors are going to start panicking about inflation in the future, and that will drive up the 10-year rate. And it's that 10-year rate that really matters for anyone with a mortgage right now.
Oh, that's also crucial information. Thank you for helping us understand. It's complicated stuff, but you put it in a way that is easy to understand.
Well, one thing I'd like to say is that the difference between overnight and 10-year rates is what people call the yield curve. And the yield curve has been steepening, which means that even as overnight rates stay low, the 10-year rate's going up because investors, not the president, but investors are worried.
Let me ask you about the president's trade war, because, of course, that's something we're also watching very closely. There's this new deadline on Friday, August 1st. What are you watching for there? Is his pressure campaign in that front working?
Well, right now, investors are in love with the so-called TACO trade. That's an acronym for Trump Always Chickens Out, TACO. And essentially, people have been buying the stock market, presuming that President Trump will back down and cut some kind of deal with his so-called allies or trading partners, or right now, frenemies, more accurately. So we've seen that to some degree between the US and Japan, the US and the EU in the last few days. However, there are 2 big question marks right now. The first is whether these so-called deals that have been announced are actually proper trade deals, because they look more like made-for-television sound bites, and we don't actually know the details. We haven't got the pages of documentation you would normally have.
Which can be 1,000 plus, like we've seen before.
Absolutely, and we've already seen signs that both the European Union and Japan are saying, actually, what you think, President Trump, we agreed isn't quite what we thought we agreed, and there's going to be a lot of jostling later on.
Okay.
The second thing is that there are a lot of countries right now who don't yet have these deals, and we're going to have to see what happens on Friday, whether that deadline gets extended or not.
I believe there's only about a half dozen that have made agreements, and there's like 24 that got letters saying, here's your rate. So where are the rest? Gillian Tett, it was so great to talk with you. Thank you very much.
Great to be on the show.